Hi everyone. Hi. Welcome to my presentation. Today I'll be discussing some of the Bitcoin research that we conducted at Fulgur Ventures for our quant department to be able to develop different strategies with the sole purpose to outperform a buy and hold benchmark. And to start with, I wanted to show you this fidelity chart, which contains 22 different assets over 40 years and maps out, orders them based on their 5-year cumulative annualized return. And it has assets like S&P 500, gold, long-term bonds, and also Bitcoin. And what you can see is that, and of course we all know this, for the last 10 years, Bitcoin has outperformed the market significantly, with the exception of the year 22, where here it's in the middle of the pack. So, the message from this chart has been basically that you buy Bitcoin, you hold it for about 5 years, and you drastically outperform the market. And so the task of beating this is quite, it's not trivial. And we wanted to uncover a framework that would allow us to understand Bitcoin on a much deeper level and to be able to forecast, where it is going. And we did this with the Bitcoin power law theory, which I'll present some of the research that we conducted. So, what is a power law? A power law is a mathematical function. Basically, it's a relationship between two quantities where one quantity grows proportionally with another at a fixed exponent. And it's given by a simple equation that you can see here. So like y equals ax to some exponent n. And it helps to visualize these functions. Here I plotted 3 different space domains. So on the left chart we have the linear chart, in the middle is a log linear chart, and on the far right is a log-log chart. And the blue line is the power law, and I also plotted an exponential growing function, which is it's also a process where it's a function which describes a quantity that's growing at a fixed rate over equal time intervals. And you can see that in the linear space, it's quite difficult to differentiate if the power law is an actual power law, or because it could be just an exponent with a smaller growth rate. But the segregation becomes much more apparent in the other 2 spaces. So in the log linear chart, which basically means that the y-axis is logarithmic and the x-axis is linear, the exponential becomes a straight line, and it's fairly easy for us to intuitively figure out and see a straight line. And in the double logarithmic chart, where the x-axis is also logarithmic, the power law becomes just a straight line that becomes very easily to identify. And if we plot Bitcoin's price data, historic price, then on these 3 domains, then you can see that on the log-log chart, it basically forms this very, very easily identifiable straight line. And this is basically price against days since the Genesis block. And from here on out, I'll just use years instead, because it's a bit more intuitive to understand, even though I used the days for all the calculations. And this relationship, basically, it's not only fixed to price, it comes up a lot within Bitcoin. So here is the price against time, but we also see this with addresses against time. It's a linear relationship. Also, hash rate against time follows this linear relationship. And if you plot price, addresses, and hash rate against each other, they also form a power law within each other. And just as a note, the R-squared value for all of those is 95% and above, meaning that it's a very, very strong statistical fit and explains about 95% of the variance of the data. And so here I actually plotted the three-dimensional relationship of addresses, hash rate, and price in three-dimensional space. And empirically, we find the following relationships. So the amount of users, they grow with respect to time cubed. And the price is proportional to the amount of addresses squared, which is basically an empirical observation of the Metcalfe's law, which states that the value of a network increases with the square of its users. And the hash rate has also grown proportionally to the square of the price, which equates to number of days since the genesis block squared. And price is proportional to the number of days to the power of 6. So quite a reasonable question would be, why should we care about this? Because at the end of the day, it's just a straight line going through the data. And the thing is, power laws, they're quite ubiquitous in sciences. And for example, in physics, they naturally describe scale invariant, robust, very stable systems. And it also makes the life of a data scientist quite easy, because those systems typically are quite predictable. So these relationships show up in social networks, the growth dynamics of, for example, the internet, or messaging apps like WeChat, or there's also open source repositories for scientific research, like ArcSieve. It shows up in the study of cities. For example, here is a log chart of the income, personal income, against the size of a population of a city, GDP, crime rates, number of patents, and on and on and on. Also presents this power law relationship. Within astronomy, planets orbiting, the period of the orbits with respect to their short-term axis, that follows a power law. We have gravitational force that also follows the power law. Electrostatic force all follow this linear relationship. And in biology, it also manifests itself as the relationship of metabolism and the size of the animal. And this is from physics. In physics, basically, power laws show up everywhere. So this is quite a complicated chart, but it basically maps the mass against the radius for everything within the universe, starting from elementary particles all the way to black holes and everything in between, like humans, viruses, bacteria, planets, and so on. And these linear bands basically form objects of the same densities. And as you can see, they are all linear on this double logarithmic chart. So it's a very ubiquitous relationship that shows up everywhere. And the social network is something that lends itself as a good analogy to Bitcoin. Here I have the chart of the internet adoption over the years. And the data was started to be collected since the 90s all the way until today. And you see that this has formed a power law on the double logarithmic chart. An interesting exercise would be to reverse engineer this, to go all the way in the beginning of the 80s when the modern internet was conceptualized, and we are able to see and predict how this growth would have evolved. And a more interesting exercise would have been if we actually have had this data before, we could have predicted the growth of this network very well for basically since the 90s, all the way until today. And with Bitcoin, we basically have this data. And the thesis is that Bitcoin is like the internet in the 90s, and it's still very, very early. And with the adoption, Bitcoin is a long-term play with the power law at its core. Another example would be the nature of cities, and Bitcoin, it behaves in many senses like a city. There's a physicist, Jeffrey West, who studied cities quite extensively, and he's a leading expert in building scientific models of cities. And he often compares cities with companies, where companies, they are the complete opposite. They grow in an exponential, rapid fashion, then stabilize, and usually after about an order of 10 years, they decline exponentially. But cities, they are difficult to kill, and they keep on growing, even if sometimes countries collapse, but cities, they remain attractive. And one of the reasons that comes from his research is that cities have many, many networks within them. There's infrastructure network, there's like water, electricity, gas, there's transport networks, there's like road networks, train networks, public bus networks, and regulatory and legal networks, police, fire, emergencies networks, and so on. And all of these networks, they intertwine, and if one layer grows, it has an effect on another layer. So if something, like we get a new subway line, this sparks growth in another section, like jobs, housing, and so on. And these positive feedback loops, that's what really makes cities robust. And within Bitcoin, we also have different networks. We have the blockchain itself. We have mining network, L2 networks. We have users, developers, merchants, exchanges, and more recently we have the ETFs and Bitcoin treasury companies. And the hallmark of networks, they present themselves as these power law relationships. And this is basically what we're seeing from the same 3D plot that I showed you before. And a lot of analogies, this is quite analogous with cities and how cities are formed. So with this analogy, Bitcoin currently sits at around 2 trillion market cap, and it's projected to increase in value in about 800 billion annually. So this is like the GDP of the city. And there's not really that many cities around the world in the physical sense that share a larger GDP. And so even though this metaphor is not, you shouldn't think of Bitcoin as a literal city. It could be, you could think of it as a city in cyberspace. So from this, I wanted to show you that power laws are quite essential, and they're really the signal. So when you identify power laws within a system, you should take notice, and it should be studied. And so if we dynamically fit this power law within Bitcoin, you can also see how the R-squared value changed over time. And in the first 7 years of its history, there was quite a lot of volatility within this R squared value, which basically, again, shows you how good of a fit this model is. And since about 2017, it has stabilized and has been monotonically going up. And 2017 was actually the year when it was first discovered. So we have about 7 to 8 years of data, which is out of sample. So about right here. And since then, this the price of Bitcoin has really followed the power law exceptionally well. And then last year, it has been following the power law basically to the T. And also the parameters have stabilized themselves after 2017. You can see that it has been hovering around 6, which again can be derived from the Metcalfe's law and the empirical observations that I showed you at the beginning of the slide. If we plot a static power law, we can decompose this into its residuals, which is just the subtraction of the price against this trend line, and we'll get the chart that you can see on the right. So this is just the deviation of the price from the trend line. And using some statistical tools called hidden Markov models, we can decompose the price into 3 different state regimes. And I color-coded them here with different colors. And a good analogy, again, lends itself from fluid dynamics, where you have different types of flow. So you have laminar flow, which I also called here state 1, and you have turbulent flow, which I compared to state 3. And these 2 types of flow, they can happen within one system, but they have different characteristics. And these 2 types of flows, they have a transition phase in between them, which is very similar to how Bitcoin has behaved in the past. So we have the core power law channel, which is basically the first state of Bitcoin. And this is really what, like the essence of the power law. As you can see, it's pretty much parallel to the trend line. And this is when Bitcoin is usually pronounced dead and happens to be in a bear market. Even in a bear market, Bitcoin basically grows at a modest t to the power of 6. And whenever there is some excitement in the system, we enter the transition phase, which is usually rather short-lived and typically has resolved in these bubble phases. So currently we're in the transition phase of the market. You can also represent the data in a polar coordinate, which is basically the radius is the price here, and a full revolution is a 4-year cycle, which we have seen so far. And the cycles tops and the troughs align themselves rather well, with the exception of the first peak. There's actually an extension to the Bitcoin power law theory, which is the dynamic power cycle. And that basically presumes that the first cycle was compressed. Basically postulating that, because of the constraints of the market, there was no market to trade Bitcoin. So the buildup of this potential energy resulted in a faster cycle. And then if you combine this with the halving events being constraints, we can basically say that the first cycle was compressed. I tried to test this hypothesis by basically applying a linear transformation to the first cycle and just in a way just stretching this data to from the first trading day until the genesis day. And so this is how the data looks like normally. And if we take this first cycle and map it all the way back to the genesis date, it does fit the periodic Gaussian that can map the cycle behavior pretty well. It is an extension and more of a interesting observation of Bitcoin's history. So it should be taken with a grain of salt, but it's a quite a interesting observation. And lastly, just wanted to present some of the price predictions based on this model. Just one more thing before going back. So also wanted to say that the peaks, they have so far exhibited quite a statistically profound exponential decay, which basically I map over here with the decaying channel. And the bottoms of the power law have been quite predictable over the years, and there seems to be this what is called the resistance line, which is basically the channel where Bitcoin behaves as a network, as a real power law. And using these channels, we can and the trend line, we can basically make predictions about how Bitcoin will manifest itself in the future. So yeah, for the end of this year, the prediction for the bear market is around $50,000 US, and for the fair value it's around 120, with the bull market being at around 225,000 USD. I also included one standard deviation bubble, which is a dubious way of predicting the bull markets, but it is widely used and is quite applicable just for in case this decay channel does not hold, because there we only have 4 data points. Even with a high R² value, it is reasonable to say that there could be some wiggle room there. And 1 million per coin, based on this power law prediction, is projected between 2034 and the year 2038. And 10 million per coin is in about 20 years. So from 2046 to the middle of this century, essentially. So this is what I wanted to share with you today. And yeah, if you have any questions.
Sorry, yeah. This chart is inflation adjusted.
So
is there any depreciation of value?
So that's a very good question. This chart does not include inflation, but you could map it with the gold ounces, so in gold, and you get roughly the same predictions. I don't have the charts here, but there is a way to include inflation in this calculation too. Yes.
Okay.
Yeah.
Have you done the same exercise with the hash rate?
Sorry?
Have you done the same thing, the same table with the hash rate?
With the hash rate, no, I didn't do this.
The evolution of
the hash rate.
Time?
It's I do have the relationship that I showed you. So it's basically the square of the price. So you can kind of see that. This growth would be basically squared, but I haven't done explicit exercises with that. Yeah.
Just out of curiosity, at Fulgo, does this mean from an investment perspective, you're then also, let's say, looking at companies and thinking, this is how many users the ecosystem will have, or like addresses, like does it play into your investment thesis?
For companies specifically?
Like when you're investing in companies and saying, okay, what could the potential user base be? How big could could the TAM be?
Yeah.
This kind of thing.
So for companies, they don't exhibit the same power law behaviors.
Right.
Yeah, that's what I was alluding to, like in my previous slides. And yeah, companies, they usually experience these exponential growth. So more like an S type of technology growth. So we don't use this for companies, but yeah.
Oh, I mean, like, if you are thinking, like, could this Bitcoin company, would you expect it to have a certain size of a market or user base or hash rate, like, if it's related to mining, this kind of thing, would any of that play into your analysis?
From my perspective, it's not something that I'm responsible for, but I guess you could incorporate, like, for example, if a company is related to mining, you could basically include that in the analysis. Yes, but we don't do this explicitly. No.
And maybe related to that also the timing, right? So if you're at the point that Bitcoin is reaching the K channel prediction, then maybe that's a time to deploy capital, right?
So.
And then if instead you're at the point of bear market, then maybe you don't sell your Bitcoin to invest in a company.
So yeah, I mean, a simple way to trade this would be basically to ride the waves and then kind of, DCA your way out of this. So yes, that is one of the ways that you can do this. Yeah. The bubbles, at least with the decay channel, they're projected to diminish. We might get, if this holds, at least the decay channel, we might, see the next bubble in 4 years as well. But the return from the bubbles, at least, will diminish over time. The bubble peaks will go down with respect to the trend line. Yeah. Yes.
Do power laws change nature usually, or?
Yeah, of course. So I mean, systems do have constraints. Like for example, here, the rate of adoption will at some point, stop because there's only a limited amount of users. You cannot go forever, and there are other models that basically model this kind of the S type of curve. Like for example, there's the Weibull distribution, but in the beginning it collapses into a parallel. So I mean, you could do the same exercise with this type of function and this type of distribution, but currently you'll just get a parallel because that's what the data indicates. And you would have to fix where the where the adoption will stop, depending on how big Bitcoin can get. But for the 1 million prediction and the 10 million prediction that I gave you, basically the power law is still relevant for the next 10 years at least. So. Yep.
Just to wrap up, to be clear, can you give us your use case, how entrepreneurs or companies or many businesses can use this information? Just to make an example, I work in real estate.
Mm-hmm.
I want to collateralize Bitcoin to invest in real estate.
Mm-hmm.
I would like to match my operation to this chart
Mm-hmm.
in order to sell and exit building when Bitcoin is low to buy Bitcoin, and then when Bitcoin is high, collateralize to then invest in real estate.
Mm-hmm.
Do this loop where I can actually exit on real estate, buy Bitcoin, and get improvement from this cycle. Is this an use case or whatever? What other use case do you see except trading or real estate or other stuff for that?
From a entrepreneurial point of view, that's an interesting thought exercise. I mean, so this was a development mainly for trading, using. I mean, that's a difficult one, to be honest. I'm not.
It's difficult because you can build multiple business models on Bitcoin, and you can also work with time, with hash rate, and with many other stuff.
I mean, if your business revolves around hash rate, for example, or somehow around the users of Bitcoin, you could use the power laws within those relationships to basically map out how, like for example, if you have the amount of users currently, you can see if that's the fair value of users, or if perhaps we're above trend, which could then mean that okay, we're probably going to correct so the adoption might go lower, but that would be within bounds of the power law. So, I mean, hopefully that answers your question.
Yeah.
So.
Don't sell, right?
Yeah, I mean, this basically up and to the right, yeah. A hodl strategy is always applicable in this case, yeah. Yeah. All right.
This one says sell on the top only. But this one helps you.
Well, there is, you know, if you analyze on-chain data, you can basically segregate the holders into 3 different categories. Holders that hold for more than a year. Those holders, they basically typically sell their Bitcoin at the top. So they trade their Bitcoin, they sell top and buy bottoms. And those holders that hold less than a year, they typically do the reverse. And then there's also a very suboptimal strategy. And then the holders that hold up to a month, I don't know what they're doing. Like they're just all over the place. And from the very beginning, if you look at the holders that really, you know, hold for longer periods of time, their amount of Bitcoin has gone up by 2x. So, I mean, if you follow the smart money, that would be the strategy to follow. Yeah.
It's not too easy.
Well, if you, you do have to, you know, be able to, you know, to dynamically do this and to build such a framework. So there's still, you know, it's not open to everybody. Not everybody has access to coding or, you know, tools to be able to build such a system. But
because it's adjusted on time, so it's not just a picture. I can follow the picture, but you adjust that on databases.
Sorry, say it again.
I mean, it's not just I take a picture on this and I follow the chart, and actually I have the key to double my money. It's actually you have this system, but you have to keep it updated based on data.
I mean, well, yeah, essentially you would have to update it every single day just to see where the actual price is, you know.
There are sites charting some of these things now.
Sorry?
There are sites charting some of these things now. Not this exact one, but
yeah.
Like 21st Intelligence, they're doing like, kind of showing
yeah.
power laws.
Yeah, I mean, you can use this to make, you know, investment decisions of where Bitcoin is and, you know, sell part of it if it's overvalued or, yeah. So, I mean, this is obviously, you know, open in the domain, open source, so to speak, yeah. Right.
Thanks.
Yeah, no, thank you. Thank you.